Hello, very good morning to all and happy Friday. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Happy Friday. Good morning. Today will be the 25th of July 2025. So as usual, let's have a quick look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the gist of our daily dose, which is the intraday technical outlook on the 4 major US dollar pair, the 6 major stock indices, and as well as the 2 key commodities market, which is gold XAU/USD and West Texas crude oil. Let's have a quick recap what has taken shape yesterday in terms of the news flow, economic data releases, and as well as the news flow and economic data releases for today early Asia session before the start of our daily dose at the 11 a.m. Singapore time mark, and how this particular data and event impact the intraday movement of all these broad-based cross asset classes that we cover on a daily basis. So let us start with yesterday's economic data/events. So yesterday we do have a slew of PMI data releases across the globe. So let me share with you over here. Okay, hopefully I could see my screen. Yeah, good. All right. So yesterday we do have a slew of PMI data release. So over at the Eurozone over here, we start to see data from the manufacturing PMI actually improve slightly. So Eurozone manufacturing PMI came in at 49.8, slightly above 49.5 that was printed in the previous month of June, and as well as 49.7 that was being forecasted by market participants. And the services PMI for Eurozone preliminary for the month of July also improved as well into the expansionary mode above 50. So it came in at 51.2, above 50.5 that was printed in June, and also above market expectation of 50.7 over here. And what's so not so rosy is the the services PMI for UK. So the services PMI for UK actually came below expectation. So it was 51.2 for the month of July. So that's preliminary, below market expecting of 53 and also below 52.8. So the expansion starts to slow down from the services side. So, and that actually causes the sterling dollar to actually be one of the underperformer against the sterling to be one of the underperformer against the greenback yesterday. So let us touch on the intraday technical outlook on the sterling dollar. And also, if you go to the US side of the story over here, so for US, if you go all the way down, the manufacturing PMI contracted, all right, for the flash for the month of July. So it contracted to 49.5, way below market expectation of 52.6. And also it was at 52 for the month of June. But however, for the services side, which is much more important, why? Because we know that 3/4 of US economic growth has been driven by services activities. So hence, market participants were paying very close attention to the services figure, much more than the manufacturing figure. So for the global S&P services PMI flash for July for US, expanded much further to 55.2, way above what market is expecting at 53, and from the previous month of 52.9 over here. So given this rather robust services PMI data for US that managed to actually overcome the weakness for the manufacturing flash PMI for US, and that causes a positive feedback loop into the US major stock indices over here, particularly on the Nasdaq 100. All right, so the Nasdaq 100 actually lead the major 4 indices yesterday by closing at 0.25% to a fresh all-time high, while however the S&P 500 was actually flatlined at 0.07 and 0.07%, almost unchanged. If you look at it over here, start Okay, so it start around at the 6,360 level. There it traded sideways, and towards the end of the US session, it almost ended flat as well at 6,360. And the Dow Jones and the Russell 2000 underperformed by negative 0.7%, and the Russell is down by negative 1.36%. So if you look at the S&P heat map over here, all thanks to the mega cap technology stocks with Microsoft, Nvidia, Google and Amazon both outperforming the S&P 500, and that causes the Nasdaq 100 to actually outperform among the four major US stock indices yesterday, with a gain of 0.25% due to this stellar intraday performance of these few mega cap technology stocks that has a higher weightage in the Nasdaq 100 versus the S&P 500, and even versus the Dow Jones, because Dow Jones doesn't have much weightage towards these mega cap technology stocks. So thanks to Microsoft, which is up by 0.99%, Nvidia continues to lead, up by positive 1.73%, Amazon up by 1.73% as well, followed by Google up by 0.88%. All right, then over to the FX space over here, the focus will be on this major European Central Bank, the ECB. Why? Because that actually will impact on the euro dollar, and the euro dollar is the biggest component currency within the US dollar index. So yesterday, ECB we call it left its benchmark deposit rate, we call it the depo rate, unchanged at 2%. So that actually came in within market expectation after cutting it for 8 consecutive times since late last year. So after this pause of after this widely expected pause yesterday by ECB, during the press conference, Lagarde actually hinted that ECB is a very high chance that it will be at the tail end of the interest rate cut cycle over here. All right, so he said that ECB now is in a wait and see mode, leaving interest rate unchanged. And over here, ECB offered no guidance on future steps due to the lacking of clarity on the eventual level of tariffs, according to Lagarde. So we know that right now there is some positive progress between the negotiation between EU and US trade officials. And yesterday's highlight in my daily dose that very likely the finalized tariff rate where US were to charge EU products heading into the US economy will be at 15%. So that is greatly reduced by the earlier higher threat where Trump imposed, which is 30%. All right. So what's interesting over here is that Lagarde said that the Eurozone economy is growing mostly in line with or little better than expectation, but the risk remain tilted to the downside over here. But however, she also did mention that we are in a good place now to hold and watch how this risk develop over the course of next few months. So because of this statement over here, we are in a good place now. That actually causes the short-term interest rate futures contract, which is the short-term interest rate futures traders in Eurozone, to actually reduce their bets for a final ECB rate cut this year. So over here, traders trim their wages on ECB delivering another interest rate reduction by the end of the year, after President Christine Lagarde indicated officials have scope to pause their cutting cycle. So what we see over here is that the money markets right now, which is the Eurozone short-term interest rate market, is now showing a 70% probability of a quarter point cut before 2025 ends. So compared with 90% before Thursday monetary policy decision. That means before ECB President Lagarde press conference. So right now, from 90% market participants in the money markets in Eurozone, previously they expect another interest rate cut before by ECB before 2025 ends, and this 90% has been reduced to 70%. So what we could see over here is that yesterday the euro dollar actually jumped right after President Lagarde's right after ECB President Lagarde's speech over here. So let me share with you. This will be the the movement over here. All right, so this is the 5-day rolling performance. Okay, let me change it. It should be 25th of July instead. Okay, 1 second. Yeah, 25th of July. Okay, so this is a 5-day rolling performance of the dollar against the other major currency. So taking into the dollar as a base currency, that means $1 equals to how many euro? So we could see that the euro dollar, the dollar euro means $1 equals to how many euro is in orange. So after ECB President Lagarde's speech, the orange line dip. All right, so that was that intraday dollar sell off against the euro. Then before the dollar just tried to trade sideways over here. All right. So if you look at the 1-day rolling performance right now, which is taking into account of the last 24 hours movement of the dollar against the other currency. So at around the start of today's Asia session, which is early bear Asia session around 8 a.m. Singapore time, previously over here the dollar sell off. So then after that, at the start of today's around 8 a.m. Singapore time, we see the dollar starts to recover. Right, so there's some form of dollar strength intraday coming back as we are speaking right now. So what causes this dollar bounce since the start of 8 a.m. Singapore time today, which is today's Asia session, that is managed to last until now, is this Japanese leading Tokyo CPI data. So we know that Japan is a bit unique. They have a nationwide Japan CPI data, and they also has this Tokyo CPI data. So Tokyo CPI data tends to be a leading indicator to actually gauge the nationwide Japan CPI trend, and they will release always 2 weeks earlier before the nationwide Japanese CPI data. So for today, the Tokyo CPI data, which is deemed as a leading trend to gauge Japanese inflation trend, actually inch down slightly. All right, so where is it? Yeah, over here. So for the Tokyo core CPI year on year, that is including excluding only energy, rose to 2.9%. Yes, that is still above the BOJ target of long term 2%, but it dipped down slightly to 3.1%. All right, from 3.1% that was printed in the previous month of June, and market expecting is at 3%. All right, and also the one stripping out food and energy over here, that's called the core Tokyo CPI. It also came in at 2.9%. That also slightly lower than the previous growth rate of 3.1% that previous printed in the previous month of June over here. So if you look at the core one, that's excluding food and energy, we see that the trend is still pointing upwards. Over here, it's still inching upwards. So you go to the 5-year trend. All right, it's still inching upward. It's only that the last few months there's a slight dip below it over here. Okay, so given that today's dip down that is came in that came in below the previous month of 3.1%, so that create a bit of negative feedback loop on the yen and causes the dollar to strengthen against the yen and also strengthen across the board. So there was a positive feedback loop for the dollar because of the expansion, the what I call it, the rate of growth for Tokyo CPI, core CPI and core CPI for the month of July came in slightly below than the previous month of June. All right, so that causes the dollar to actually strengthen from 8 a.m. Singapore time. There's a bounce that's taking shape right now as we are speaking, and it created that positive feedback loop into the entire FX space. So later I'll share with you what are the key levels to watch out for today, after also taking into account of other individual technical elements as well when I covered the short-term intraday outlook on the FX markets. All right, so with that, also to sum up everything, given the fact that yesterday we do have a slew of ECB, we have key risk event and data that take shape, the US services PMI data, the US PMI data, and together with all the other release of the global PMI from ranging from UK to Europe, and as well as ECB monetary policy decision. Let's have a quick look at the CME Fed Watch 2 to give us a gauge what is the Fed Funds futures traders thinking in their mind right now after the release of yesterday's slew of events and key data. So market participants in the Fed Funds futures contract is still viewing that next week the Fed will still stand pat at 97.4%, almost a high chance of 100% that the Fed will not cut rates, and the next rate cut will still be at a higher odds of above 50%, which is in the September meeting. All right, the 17th of September 2025 FOMC meeting, where market participants expecting the Fed funds rate to be reduced to 4% to 4.25%. So that's potentially a 25 basis point cut by assigning a rather high probability of 64%. Still recall that previously to about early last week, the probability has been reduced to around 50% and now it's back up again by 63%. So given the fact that now market participant has now bring forward the first interest rate cut to be in 17th of September again, and then thereafter the Fed is expected to pause again and engineer another potential second rate cut before 2025 ends, which is at 71% chance to bring down the Fed funds rate to 3.75% to 4%. So that will be on the 10th of December 2025 meeting. So still no change. The Dow on the Fed funds futures traders expectation is still expecting 2 interest rate cuts by the Fed and aside before 2025 end, and assigning a high probability of 64% that the first cut for 2025 is likely to come in on the 17th of September 2025 meeting, FOMC meeting. So that keeps the interest rate cut hopes alive in US, and that also potentially could actually provide additional liquidity to the US economy, boosting the firmer US stock market over here, and as well as potentially continue to see a medium-term trend, bearish trend on the US dollar. All right, so that sum up the first segment of today's daily dose. So now let us now move on to the second segment, which is the intraday technical outlook segment on the FX market. All right, so that will kickstart in a couple of seconds after I expand my screen over here. All right, good. So now let's start with the euro dollar. All right, over here. Okay, so this will be the euro dollar. So what I could see over here is that the euro dollar, after that spike up, exposed ECB Lagarde press conference, that's this bullish Marubozu candlestick, hit a intraday high of 117.88. Then thereafter it just trades sideways, and as we are speaking right now, that exposed ECB President Lagarde push up on the 9 p.m. hour mark yesterday Singapore time has been evaporated. That means all those exposed exposed ECB President Lagarde's press conference gain in the euro dollar has been wiped out. And if you look at yesterday's price movement, also lead to a bearish divergence on the hourly RSI, right? Price show higher high, but the RSI is sloping downward, so indicating the lack of upside momentum. So given that today is Friday as well, there could be potential we call it a positioning unwinding earlier by the movement of the euro dollar. So traders who have be profitable at the start of this week may potentially unwind their long position. And given this bearish divergence that is being flashed out in the RSI, and also the negative price reaction so far that we are seeing right now, post ECB President Lagarde press conference, we will now have a very low odds that the euro dollar may continue its bullish intraday bullish trend for today, and there could be a risk that the rally that kickstart since the start of this week, there will be a potential minor corrective pullback to do a retracement of at least a 38% Fibo retracement. Okay, so this is the start of Monday's rally. So all the way push it up to yesterday's intraday high, exposed ECB President Lagarde press conference, the 38% and the 61.8%. All right, confluence with the key Fibo, key graphical support level. All right, so put in a nutshell, given such intraday negative element, I will have low odds to maintain my bullish bias from yesterday, given that even though the pivotal support is not taken out, which is at 117.10, I will be more inclined to shift to a bearish bias for today, but only for a intraday minor corrective pullback scenario, okay, using 117.90 as my short-term pivotal resistance level. Two key intraday support level to watch. First support level will be 117.10, which is yesterday's short-term pivotal support level, and also this minor swing high area of 11th of June, 17th of July, and 21st of July got broken out on Tuesday, now turns into a pullback near-term support level. A breakdown below 117.10 may see the extension of today's intraday minor corrective pullback to expose the next near-term support level, which is the 61.8 Fibo retracement that I draw early on from the rally that kickstarted from Monday all the way up to yesterday's exposed ECB President Lagarde press conference intraday high, which is at 116.80, 116.60, also correspond to this medium-term ascending channel support as well. All right, so if price action drop down towards this level, somewhere around the European session, because price action is dynamic, I don't know when will it hit these levels. It could be during the European session or during the US session, but once it hit around 117.10, 117.80/116.60, I'll be on the lookout for any form of a bullish reversal candlestick to flip my honors back to the bullish camp again. Why? Because the medium-term trend still remains bullish on the euro dollar as price action continues to trade above the 50-day moving average. But however, if price action didn't hit down as intended to 117.10 or even 116.80, and from this level here it just reversed upwards and stage a bullish breakout with an hourly close above 117.90, then I've got to respect the positive price action, which indicate that the impulsive up move sequence has been revived back into the euro dollar market, where price action may now seek out a higher resistance level on at 118.25/118.45 in first step, which is the 1st of July minor swing high and a Fibo extension level. Above it sees 119.10 next. All right, so that's for the outlook of the euro dollar. Given that negative elements that I highlighted to you guys earlier on, I have lower conviction to maintain my bullish bias from yesterday, and for today I will use 117.90 as my short-term pivotal resistance to flip to a intraday bearish bias view, but only for a minor corrective decline sequence to unfold. Two key support level to watch: 117.10, 116.80/116.60 next. Then thereafter, potentially the impulsive up move sequence may materialize. Next up will be the sterling dollar. So the sterling dollar is the weaker pair against versus the euro. So it broke below the 50-day moving average again after that that lackluster services PMI flash figure for the UK economy, which I highlighted earlier at the first segment of today's daily dose. So given that it's now reaching the next support level at this former minor range top of 15th of July to 18th of July, broken out on Monday, retested it again on Tuesday before staging that rally that previously managed to reintegrate back above the 50 and the 220-day moving average before that upside momentum abates over here. And the RSI now is coming very close to the oversold level again. So with that, I will have a neutrality stance for today with a rather range bound situation at 134.70. That will be the lower limit of my range, and the upper limit of my range will be at 135.80. So flipping to a neutrality stance for today, given that the RSI is now coming back to the oversold level and price action is reaching a key near-term support level at 134.70. So neutral between 134.70, lower limit, upper limit of that neutrality range will be yesterday's Asia session high, or even that will be the yesterday's entire session high, which is at 135.80. So that's for the sterling dollar. Next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar also slid yesterday after hitting close to the first resistance level at 116.30, 166.45, 66.30, 66.45. So that is the high that was being made during the start of the European session. Then before it traded all the way down throughout the US session. So now it's actually coming back towards our pivotal support that we have yesterday. So still no change, still looking at a potential bullish bias to revive back again of the Aussie dollar, given that the Aussie dollar RSI now is also coming very close to the oversold level. So still watching very closely the 65.70 short-term pivotal support that I have for the Aussie dollar. So first resistance level I have will be a slightly lower one for today. Will be this level here, which is this level that kick-started this minor corrective decline during the US session, okay, where price action previously tried to stabilize at 66.010 over here. Then thereafter it formed a kind of a long tail hourly candlestick. Then after that, price action starts to tumble all the way down on the intraday basis. So this is kind of a near-term psychological level that market participants will be watching pretty closely as well, given there is a movement of we call it fighting between the intraday bulls and bears that kickstarted from 6 p.m. Singapore time, or 6 p.m. Singapore time, all the way up to 10 p.m. Singapore time. So doing this 4-hour mark over here at the start of the US session. Then thereafter it traded sideways, then before it gives way for the intraday bears. So pivotal support will be at 65.70. Still maintain our intraday bullish bias for a potential intraday recovery for today, given that the RSI is coming very close to the oversold level. And this ongoing uptrend still remains intact since the ongoing minor intraday uptrend still remains intact since the low of 17th of July. First resistance level to watch will be at this 0.6610. Above it exposes 6630/6645. However, if price action plunges below 65.70, then this corrective decline sequence may extend further towards the downside, towards the next near-term support level at 65.40/65.30, which is this minor congestion area over here from 18th of July to 22nd of July. Now turns into a pullback support, and also coming very closely or confluencing closely with the rising 20-day moving average as well. Okay, so that's for the Aussie dollar. Now, up next will be the dollar yen. So the dollar yen spike up today because of that CPI, Tokyo CPI data growth that came in lower than the previous month over here. So what you could see now is that the spike up has already retraced close to the 50% Fibo retracement and the golden ratio at 61.8%, which confluence with this key graphical resistance level, which is the minor swing high of 22nd of July before the last intraday drop took place over here. So given that RSI also now is at the overbought level already, and we're coming close to key Fibo retracement level as well, I will have a neutrality bias for today for the dollar yen. So neutral between the upper limit at 147.90, lower limit will be the 20-day moving average, where price action managed to break up and retest before shaping this intraday push up expose release of that Tokyo CPI data, okay, earlier this morning. So that will be at 146.40, which is a confluence with the 20-day moving average. So neutral between 147.90 and 146.40 for today on the dollar yen. All right, so that sum up the intraday technical outlook on the major US dollar pair. So let us now focus our attention to the 6 major stock indices, starting with the Hong Kong 33, which is representing the Hang Seng Index over here. So the Hong Kong 33, yesterday upon hitting the resistance level, it can't break above the resistance level at 25,750. That's our first resistance, and starts to dwindle downwards over here. And this pullback now is extending as we are speaking right now. And upon this extension of the pullback, the hourly RSI now has starts to turn bearish. So what I could see over here is that the hourly RSI now has broken below a parallel ascending trend line support that was previously in place since 19th of June. All right, so with this bearish breakdown and the breakdown below the 50 level mark indicate that yesterday's minor corrective pullback may extend further towards the downside and break below our pivotal support zone that we have a very tight one yesterday at 25,400, 25,260. So this was our pivotal support zone, all right, over here. So given the current negative reading or observation on the hourly RSI right now that is indicating the lack of upside momentum. I got to respect the current price action that is being taken shape on the Hong Kong 33 and reduce my conviction to maintain my bullish bias from yesterday. So there could be a chance right now after a very strong rally from 4th of July all the way up to yesterday's Asia session high, a potential deeper minor corrective pullback sequence may take place. And given the fact that price action has really starts to lift the 20-day moving average from a fair bit over here. So potential retracement level could be at the 38%, 38.2% Fibo retracement, maximum the 61.8% Fibo retracement. Okay, we also confluence with the graphical minor swing low of 15th of July and 18th of July. So with that, for today, very low conviction to maintain my bullish bias. So instead, I will flip to a bearish bias for this deepen minor corrective decline sequence to unfold using 25,750 as my short-term pivotal resistance level. First support level to watch will be at the 25,260. A breakdown below 25,260 exposes the 30.2% Fibo retracement, which is this graphical near-term support zone as well from 16th of July, 21st of July, former congestion. And we go previously is the 19th of March, former medium-term swing high now turns into a medium-term pullback support area at 24,940 / 24,850. All right, so this is the next support zone to watch. So if price action starts to float down to this support zone over here, I'll be looking out for signs of a bullish reversal candlestick to flip my bias back towards the bulls again, given that whatever bearish reaction that we are seeing right now is only potentially an extension of this minor corrective decline sequence that is now taking shape since yesterday's Asia session high, within a medium-term uptrend phase that is still intact for the Hong Kong 33, representing the Hang Seng Index. But however, if price action didn't dip down as intended and starts to reverse up to the upside and have a bullish breakout of an hourly close above 25,750, then the bulls has come back into the Hong Kong 33 to shape a fresh impulsive upmove sequence for the next intermediate resistance zone to come in at 26,030, 26,220 next. So that's for the Hong Kong 33. Next up will be the Nikkei 225 or the Japan 225 representing a Nikkei 225. So what we could see over here is that very similar as well. After this very sharp movement on the upside, right now the Japan 225 is now doing a pullback over here. So this pullback over here may extend further given that the hourly RSI also starts to shape this bearish element, which is a bearish divergence that we see right now. There was this bearish divergence as we exited up from the bearish divergence after the bearish divergence and now dipping below the 50 level mark and has more room to go towards the downside before hitting the oversold level. So given this bearish given this not so rosy observation that's being seen on the hourly RSI, indicating the lack of upside momentum. That means, i.e., what we are seeing right now after the failure to break above 41,975, this minor corrective pullback may extend further towards the downside and to retrace at least this 38.2% Fibo retracement, 50% Fibo retracement, which confluence with the graphical support level at 41,050 / 40,850, which is the former minor swing high of 30th of June, now turns into a pullback support. So with that, we will flip to a intraday bearish bias for this ongoing minor corrective pullback to extend further towards the downside using 41,975 as my short-term pivotal resistance level on the Japan 225 representing the Nikkei 225. A breakdown below 41,360 exposes the next support level at 41,050 / 40,850. So this is more like a minor corrective pullback sequence within a medium-term uptrend phase that is still intact as price action going to trade above the 50-day moving average, and the 50-day moving average has now surpassed above the 200-day moving average. However, if price action, instead of dipping down as intended, it starts to reverse up from here and have an hourly and a bullish breakout above 41,975, then I got to respect the bullish price action for a revival of that bullish impulsive upmove sequence to at least retest the current all-time high today at 42,513 next. All right, so that's for the Japan 225, flipping to an intraday bearish bias for this minor corrective decline sequence to extend further to the downside using 41,975 as my short-term pivotal resistance level. Next up will be the Germany 30, representing the German DAX. So German 30, after hitting 24,560, it actually shaped a minor pullback all the way to yesterday's US session, and did actually recover and try to actually play around our pivotal support at this 24,300 level, and is still holding above the 200-day moving average over here. And what you could see over here is that given that it's still holding above the 20-day moving average, not 200-day moving average, the 20-day moving average, we'll use a slightly pivotal lower level for today at 23,140, just in case of any whipsaw. So this will be my so-called pivotal support level, adjusted one, which is confluence with this rising 20-day moving average. So 23,140 will be my pivotal support level. So as long as this level holds, potentially there could be a retest of yesterday's minor swing high area at 24,560. Only a breakout above 24,560 potentially could see a fresh all-time high coming in at 24,720, which is a Fibo extension level. All right. However, if price action starts to break down below 23,140, so that would invalidate today's intraday bullish bias movement to see a further movement of this minor corrective decline to extend further towards the downside towards 23,930, which also confluence with the 50-day moving average and the minor swing low area of 16th of July and 22nd of July. Right, so that's for the Germany 30. Still maintaining our bullish bias, but with an adjusted pivotal support for today, which confluence with the 20-day moving average at 23,140. Onward next will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 managed to actually dip down and bounce off right exactly at the upper limit of our pivotal support zone, which is at 44,620/44,400. 40, okay, 44,440, which is the former minor trend descending trend line resistance from the high of 7th July down to the pullback support, and the low limit of 44,440 confluence with this rising 20-day moving average. So it's a zone over here. So still maintaining this same zone as price action hasn't broken out the current all-time high that was printed in December, exposed US presidential election result. Almost met it on Tuesday, on Wednesday, but price action starts to do some kind of pullback or consolidation. So first resistance level to watch, still maintain our bullish bias for the US Wall Street 30 for today. For sure, still using this pivotal support zone at 44,620/44,440. First resistance level to watch, 45,100. A breakout above it sees the next, seek out the next fresh all-time high, which is a new resistance zone. Defined by Fibo extension cluster levels at 45,455/45,520 next. However, if price action do a bearish breakdown below 44,440, today's intraday bullish bias will be invalidated to see another round of choppy minor corrective decline to expose the next near-term support level in first step at 44,150, which is the minor swing low of 17th of July. Okay, next up will be the S&P 500. So the S&P 500 managed to shape a higher high, which is a fresh all-time high right now as we are speaking during today's Asia session. So given that it's still rather a bit tight. So I don't want the first support level to watch will still be 6,370, where price action tested it yesterday several times before shaping this minor bounce at the close after the close of the US session. So I don't want to put my pivotal support to be so tight as 6,370. So it's still using 6,370 as my first support. Pivotal support still remains in short term at 6,340, 6,330, and road towards the next resistance level at 6,430, 6,450, which is the Fibo extension cluster level, and as well as this upper limit of this ongoing medium-term ascending channel that I drew from the low of 23rd of May. However, if price action suddenly did a bearish U-turn and have a bearish breakdown of the hourly close below 6,330, that would invalidate today's intraday bullish bias to kickstart a minor corrective decline sequence all over again, exposing 6,290 followed by 6,255, which is also correspond to the rising 20-day moving average. All right, so that's for the S&P 500. Lastly will be the Nasdaq 100. So Nasdaq 100 also moved a very similar pattern, tested our first support level at 23,190 before shaping a higher high into a fresh all-time high as I'm speaking right now. So I do not want to tighten my short-term pivotal support to be too tight at 23,190. So this will be my first support level. Pivotal support level remains unchanged, which is the very clear support level that got tested on 22nd of July, survived on 23rd of July after this V-shaped intraday recovery took shape from Wednesday US session onwards. All right, so no change, still using 23,020 as my very clear key short-term pivotal support level right now to maintain this ongoing intraday bullish bias. First resistance zone to watch will be 23,400, 23,480. Above it may seek out 23,710, which is close to this medium-term ascending channel that I drew from the low of 23rd of May, and as well confluence with a Fibo extension clustering levels as well for 23,710. However, if price action starts to U-turn on the downside and break down below 23,020, today's intraday bullish bias will be invalidated to see a further dip down towards the next intermediate support level at 22,840. Below it may expose 22,650 next. All right, so that's for the Nasdaq 100. All right, now let us move on to the commodities asset classes, starting with Gold XAU/USD. So for Gold XAU/USD, yesterday it managed to survive at the 3,360 short-term pivotal support level. Bounce up a bit, challenge again in today's Asia session over here. So given that the US dollar for some of the major US dollar pair is showing neither clear sign of a US dollar weakness, so for that I will have a neutrality stance today for gold. So flipping to a neutrality stance for gold between 3,385, okay, and the lower limit will be at 3,330, sorry, 3,333, 4 trees, which confluence with the medium-term ascending trend line in place since 31st of December 2024 low that managed to survive on the 17th of July and 9th of July over here recently, and now this support line is coming in at 3,333, which also confluence very closely to the rising 20-day and the 50-day moving average. So given the lack of clear trend bias on the US dollar, not so conviction to maintain my bullish bias view for today on Gold XAU/USD. So I'll flip to a neutrality stance instead. So neutral between 3,385 and 3,333. So only at least have a bullish breakout above 3,385. Better still with an hourly close above it, then potentially the impulsive bullish up move sequence may revive in first step to test the next intermediate resistance at 3,420 for today. So that's for Gold XAU/USD. Lastly will be the West Texas crude oil. So the West Texas crude oil over here, all right, now continues to actually test our first pivotal resistance level that we have since 2 days ago, where we flipped to a bearish bias over here for it to actually retest this short-term sideways range configuration that is in place since 25th of June 2025 low, and the support level is at 65.20, which is the lower limit of this sideways range configuration. So ever since price action break down the 20-day moving average, and so far it retested it on yesterday's Asia session and a couple of times during the US session, come break, and right now what we are seeing is a lower high on the RSI, indicating the lack of upside momentum. So for sure, 67.40 is indeed a pivotal resistance level to watch. So we'll still maintain our bearish bias for the West Texas crude oil. Near-term support level will be at 66.35, which managed to survive in yesterday's late US session over here. Okay, let's put this one, 66.35. So this will be my first support level to watch. So a breakdown below 66.35 exposes the key support range, the range support level of 65.20. all right, over here. So only a breakdown below 65.20 will trigger a bearish breakdown from this 4-week plus of range configuration that is in place since 25th of June, exposing the next near-term support level at 62.75. So for now, these are the two support levels to watch: 66.35 followed by 65.20 with pivotal resistance at 67.40. So only a bullish breakout above 67.40 will negate today's bearish bias and see a squeeze up to test the upper limit of this 4 weeks of sideways range. We saw the 200-day moving average at 68.50/69.15 over here. All right, so that sum up the intraday technical outlook on West Texas Oil and also the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So at 2 p.m. Singapore time, which is the start of the European session, will be UK retail sales figure year on year. So market participants is expecting a rather negative number, but this negative number of we call it negative 1.3%. Market is looking for a reversal of this negative 1.3% from a low growth number in the previous month of May to recover to 1.8%. So that could potentially influence the sterling dollar, the sterling crosses, and as well as the UK 100 CFD index over here. Then thereafter we have Germany business sentiment indicator. We call it the info business climate and the info current condition out at 4 p.m. Singapore time. So that could influence the euro dollar, the euro crosses, and as well as the Germany 30 CFD index. Then over to the US session, no tier 1 US session data. So the US session will be a rather quiet one, and so no Federal Reserve official speaking, as they are now in the blackout period before next week FOMC meeting. So with that, that sum up today's daily dose of market insights. I wish you all a great weekend ahead and a restful weekend as well. And we shall speak again on Monday.